Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Hello, everybody. Scott Kelly. Welcome back to the Emerging Managers Podcast. And, today I had an opportunity to interview Jacob Phillips of Tides VC on the podcast. And he's got a great background from working on the Chicago Board of Trade, Goldman Sachs, First Trust, before starting Whisper Lane Capital with his partner and then joining Tides VC. And, they focus on the later stage portion of technology and some of the leading technology. They're involved in some phenomenal startups that you hear about all the time, like OpenAI and other large companies in the AI space. As a later stage company, they really concentrate their bets on companies that are disrupting legacy industries using AI. They're involved in robotics and humanoid robotics, space, and all kinds of large opportunities that get, oversized returns and oversized opportunities. So, I'm going to share a little bit more about what I learned in our podcast and afterwards. But again, let's listen in on Jacob Phillips from Tides VC. Hello, everybody. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm excited to introduce everybody to Jacob Phillips of Tides VC. Jacob, welcome to the show.
Scott, how are you, sir? Good morning.
I'm doing great. So before we get into Tides and what you're investing in there, and it looks like you got a pretty great portfolio from what I saw on the website. Give me a little background about what you did prior to Tides and your personal background, if you want.
Yeah, for sure, Scott. So originally from the Midwest, Wisconsin specifically. I went to university in the Midwest, graduated, made my way to Chicago, and started out kind of getting my stripes at the Chicago Board of Trade. So when it was still, if you've seen Ferris Bueller's Day Off, Scott, you'll know kind of when it was still live, open outcry. There's still a little bit of it left, but a lot of that's moved to screens now. But it was an amazing start to my finance journey. Was out of the industry for a bit, and then Goldman Sachs came calling in 2010. So they're growing out a group in their asset management division. After about 8 interviews, came on board with them, and was on a big sales floor in the Chicago office, selling public market securities after getting licensed to financial advisors in the independent channel. So get a real chance to learn the wealth management space at the ground floor. Eventually made my way after 3.5, 4 years over to a company called First Trust. And I guess I should say before that, really found structured products as an area that I had a lot of particular interest in. So really enjoyed kind of the more complex nature of those investments. Because of my interest, I think I had one of the largest deals. We closed like an $80 million deal, largest deals at the firm. So transitioned to a company called First Trust. They're actually building out a structured products group. So I was one of their first salespeople, went over to them in 2014, led sales there, was at one of the top salespeople, made my way out to Los Angeles and covered the West Coast and was there until 2022 when I saw that, you could only chop up Apple or Microsoft in so many different ways. And, the private markets really came calling. Thought there was a lot of interesting deal flow to be had there. So started my firm Whisper Lane Capital, which at that time was a boutique investment bank. I did some deals there, closed some sports deals, some tech deals, just a lot of different opportunities. Then got partnered up with managing partner at Tides, a guy named Mike Loretz, and came on board and have just focused on a lot more tech that's disrupting legacy industries using AI and others. That's what we've done since at Tides. That's kind of a quick walk through of my background, Scott.
Fantastic. Appreciate that. We have similar backgrounds. My first job, still as an undergrad or just out of college, was a runner on the New York Stock Exchange in the early 80s. And so, basically my job was to have, cigarettes, thrown at me. But so I definitely know the drill there. So thanks for that background. I appreciate that. So talk a little bit about Tides. You got some fascinating companies in your portfolio, but maybe share about the fund's thesis and expand on that a little bit more. How you invest, where you invest, check size, things of that nature.
Sure, Scott. So I think we'll get more to this on why Tides in a moment, but I think that with the emergence of AI and the truly disruptive nature, and I don't have to go into much detail there, what was, you know, those that were less informed would just make money in whatever sector they have expertise in, and then just put it into the SPX or the SPY and just collect your, 10% over time with volatility. We think that it's really becoming a stock pickers universe now for the first time in decades, because there are going to be real winners and losers that truly adapt to this coming technology versus being more resistant to it. And it's not just the CEOs and the C-suite at the top. It's really, can they get individuals down the whole corporate ladder to adopt to these changes? I mean, I'm big on human psychology, Scott. So after the age of 35, people are 9-1 against any meaningful change in their life. So if you've got a 40-year-old, he or she is usually locked and loaded in habits and views on the world, etc. So if they're resistant to change, and you have an older organization, they may be left behind. So I think if you can really find the best in breed, best in sector companies, and do the research that shows that they're really adopting AI more broadly, and take concentrated bets in those companies, we think that those outsized returns are still possible. So for us at Tides, at this moment, we don't have a captive fund. We take more of that stock pickers view, where we're going to raise special purpose vehicles from, call it, $1 to $30 million, and take concentrated views in companies broadly. We've had some strong wins in early stage, but we think that we're going to leave that to more of the venture firms that have the ability to look at thousands of deals a year, which we do anyway. But we're looking more later stage, more established, and obviously with the pre-IPO market really heating up, that's worked out well for us.
Well, it's interesting you mentioned the last several interviews I've done. A lot of folks the SPVs obviously have been around for a while, but they're becoming far more prevalent, in my opinion, over the course of the last, several months and last couple of years. So talk to me about some of the companies that you're involved in now, because you mentioned it earlier on that you invest in AI as it applies to maybe other traditional businesses, but yeah, you got some pretty big names in the portfolio. So maybe talk about your book a little bit. Share what you're investing in now, maybe some of the success stories that you've had.
Yeah, absolutely. So broadly, a name that everyone would recognize is OpenAI. So we got into the
Mhm.
OpenAI round at 157 billion, and they're raising at 500 now. It's interesting, Scott. I mean, in the large language model world, I think the base case that most people would agree on is, if you identify the top three LLMs at present in no particular order, we think that's going to be OpenAI and their daily active, their monthly active users, call it 500 to 700 million. The adoption rates are unlike anything we've ever seen ever, even going back to the Google days and the AOL
Sure.
days. I mean, it's just incredible, the revenue growth. So in no particular order, OpenAI, xAI, and Anthropic. And if you agree to that, we think that there's opportunities as this plays out, that the top company is worth 5 trillion. Eventually, the second's worth 2 trillion. The third's worth 1 trillion. So with Anthropic raising at 170 billion, OpenAI raising at 500, xAI in the 210, 250 range, we still think there's room to run, as crazy as that sounds, with these
Right.
valuations. So, that's just from a big world AI standpoint. That's kind of a concentrated bet that we've taken there, and that's through some intermediary partners. And then I won't say the name specifically, Scott, because I need to save a little secret sauce for any of your LPs that may want to chat with me. But Elon Musk has come out and said that humanoid robotics are going to be the product that has the biggest total addressable market, or TAM, of any product in the history of mankind. And if that's the case, there's a lot of sectors in that emerging technology to focus on. And there's a company that we've been in since their pre-seed valuation at 35 million. We wrote a check at 150. We're now raising at 360. And so that's an area where they're heavy manufacturing, focused on areas of the market that are already dangerous for humans, and
Mhm.
there's a labor shortage. So we're taking a very concentrated bet in that company with one of the best we think, the best team in robotics globally. And yeah, that's an example of something that we found early, and we've been able to ride the wave of kind of to this point. So we'll see from there, but that's another example. And then just a lot of interesting names in kind of the deep tech space. But yeah, I think those are two specific examples.
So, kind of expanding on what you mentioned, you mentioned obviously the LM space. Maybe talk about companies that are not large language models, but are really going to apply, the technology and really benefit from it. Any particular industry sectors that you think are going to be in the forefront?
Yeah, I think I'll even take, unfortunately, a little bit more of a pessimistic view on that question, Scott, which is, I think that there's going to be a lot of washout of these quote unquote AI companies that people realize, and VCs may have, you see the internet memes about the most beautiful girl at the dinner, et cetera, et cetera. If you're writing checks into those companies 2 years ago, before realizing what a true AI company was, it's just
Right.
an idea built on top of ChatGPT, backbone, or Claude backbone. And I think these big LLMs are going to eventually eat the world, and a lot of those they're going to be able to provide the capabilities in house that those other companies are kind of creating a second layer on top of. So I think it's really important to do your research on what are companies doing. Are they building it just on these backbones of existing large LLMs, or are they doing the training data and building, the models themselves? And I think that's really important to know and get a sense of before you jump into any early stage deals. So I think that's more so. I mean, I think any sectors that are being disrupted by legacy industries. My partner Mike comes from real estate development, so his expertise is in that space. My expertise comes in like more of the fintech background with my background. So we're kind of looking for opportunities in those sectors.
No, I'm glad you put a pessimistic view because I was there in the dot-com boom in the San Francisco Bay Area, and a lot of good companies came out of it, but so did Pets.com and so did Webvan. So you got to look at these things, a bit pragmatically, and I appreciate that. So let's talk about the makeup of where you're getting your flow from, and maybe examples, the very specific names of the LPs that are investing with you in the SPVs.
Sure. So it's a lot of ultra high net worths and family offices at this point, Scott. I think that the venture ecosystem is interesting, not unlike a lot of, legacy industries out there where, the best of the best and the cream rises to the top. So 90% of venture returns come from the top 10% of venture firms, i.e., the quote unquote tier one firms. And I think for boutique firms like Ties to Survive, we need to be locked into the ecosystem with a lot of those large firms. So, for instance, if you think of OpenAI, in the round that we invested, Thrive Capital, Jared Kushner's brother, they led the round. In order to get on the cap table, it's a $250 million check. And because those firms are writing checks much larger than that. And then with our relationships with other reputable firms there, we're able to get access just through, a multi-layered approach. So we do a really good job of vetting all of the layers above us and having all the documents in place so that when a liquidity event or an IPO exists, our investors can be confident knowing that their money and their returns are what we stated that they will be at the beginning of the investment. That's a way for these ultra high net worths that maybe are writing, a $500,000 checks that don't quite have the balance sheet to get in with one of the tier ones and have large 7, 8 figure, check minimums, that they're able to still participate in the best names out there, albeit with just a slightly elevated fee structure. So that's an example of how we are in our deal flow, and we're able to get into the top names, the Andurils, the OpenAIs, et cetera. And then again, we'll take some occasional early swings, but I've lost LPs, trying to take concentrated SPV bets early. So I think, most of my clientele and LP base are willing to forego that 1000x, because really, like, the 50K check into Uber that becomes 175 million, I think you got to be in pretty interesting, Silicon Valley rooms, and those deals never make it to the light of day. So I think that, waiting a little bit longer and going for those doubles and the 5, 10, 15 X's, I think our investors are kind of excited about that risk reward profile. So
I've been asking this question to the last several folks I've interviewed. Obviously, AI is part of your investment thesis, but how does AI play into your due diligence, especially maybe in the early stage companies?
yeah, absolutely. I think it's just, with having a smaller team and a nimble team, just using, and not just one, using all of the LLMs that we pay for to just do deep competitor analysis and seeing what's out there. Entrepreneurs, I'm one myself. I'm sure you are, Scott. God love them. I think the decks are obviously a very rosy picture of the world. So, especially as it relates to the competitive landscape, I think that's the biggest thing is just diving into, you don't want to be obsessed with your competition, but you want to be aware of them. So, being able to broaden that scope of what's on a deck that maybe has 3 to 4 competitors, kind of knowing what's out there and then adjacent opportunities, that's where AI can help us with the competitive landscape. And then just helping our entrepreneurs or folks that we invest with just get connected to other strategics that can help them complete their round or can help them with kind of organic growth in whatever sector industry they're in. It can just make the world a smaller place much more quickly. And that's where what we've seen is the biggest value add.
Fantastic. So, for folks that are listening in today that are considering investing with Tides and becoming a part of your SPVs, why your fund? Why your group? Why now?
Yeah, so I think we're really on the forefront. Being in Los Angeles, it's a bustling ecosystem for venture. It's the culture center of the universe. I'm just a Midwest boy from Wisconsin, but going back to I'm in my 40s, Scott. So even going back to I don't know if you remember Pogs, those
Oh,
little
yeah.
little kind of game that we used to play. Like
Sure.
all these cultural centers are happening in LA and moving their way east. So I think
Hmm.
being at the forefront of media, entertainment, CPG, tech, and then being really tapped into the San Francisco and Silicon Valley ecosystem, we're at a very unique place to find deal flow, as well as deal flow that has celebrity attachments to it. I mean, that's obviously
Hmm.
been a huge part of CPG, and a lot of that starts here in Los Angeles. So I think being tapped into this marketplace provides us a very unique opportunity to provide West Coast flow to LPs from back in the Midwest or other particular markets out here on the West Coast.
Anything else you want to share with our listeners today?
If LPs are interested in proper deal flow in areas that we have particular expertise in, we'd love to chat and happy to help get them involved. I'm in a lot of different networking groups, founders, investors, next gen. Happy to get them plugged into different areas. I mean, obviously, we'd love to work with them in any capacity investment wise, but I'm also happy to open my network up where it makes sense for them to be with the right people. So
Great. So, how can people learn more about Tides VC, become a potential investor in the SPV, and get in contact with you?
yeah, absolutely. My email, Scott, is Jacob JACOB at tides.vc. So just reach out to me over email, and happy to get you connected in what we're doing and just get a sense of what we can provide up front.
Fantastic. For everyone listening today, make sure you follow what Jacob's doing. He's got some of the brand names in the portfolio that I think would be really intriguing and some interesting, lesser known opportunities. And for all listening today, make sure you like, comment, and share this podcast. And finally, Jacob, thanks for being on the show today.
Thanks, Scott. Appreciate it.
Well, welcome back. And one thing I was really interesting in interviewing Jacob from Tides BC is their relationships and their opportunities they're getting involved in and how both play into that. One thing that's been real prevalent with a lot of the interviews I've done is these investors aren't necessarily using a traditional venture capital structure. They're using special purpose vehicles. And the same holds true with Jacob and Tides BC. Investors can participate in specific deals that they have as opposed to investing in an entire fund. And they can invest anywhere from $1 million to $30 million. And what that does is allow their co-investors to use their top name relationships. We're talking with some of the biggest firms in the country in terms of VCs and some of the fastest growing companies in AI and technology. And that provides a real opportunity for them and their investors to get in later stage. Companies that have already raised millions or hundreds of millions of dollars and are in the pre-IPO sector of the market. So again, what that does, it allows the firm to reduce some risk and go for doubles and 5 to 10x returns rather than chasing 1,000x early stage returns. And that aligns themselves with basically a more conservative risk profile. So it was really interesting that we're finding now over the course of our podcast is that we're finding very early stage investors, very later stage investors like Jacob, and some specialty investors. But we got a lot more of that coming. So I encourage you to continue to listen to the podcast, continue to visit our emergingmanagerspodcast.com, follow us on our social channels, because we've got a lot more great emerging managers. Thank you. Hope you listen in soon.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.